Welcome back for another look at the charts. In today's report we will be looking into EUR/USD, GBPUSD, AUDUSD and safe haven USDCHF, and with no time to waste, we move to EUR/USDs for our chart. The path of the pandemic in Europe and the slow vaccination schedule, accompanied by the possibility of renewed lockdown measures in various parts of the area, seem to weigh on the euro. USD fundamentals, on the other hand, seem to be characterized by the quick pace of vaccination, yet also for the quicker than expected US economic recovery. Nevertheless, the common currency tended to gain against the USD in the past few days, taking possibly advantage of the USD weakness. EUR/USD stabilized, even dropped somewhat, distancing itself from the 1.1905 resistance line during the late American session yesterday. Given that the pair's price action has broken the upward trend line, characterizing its movement since the 5th of April, we temporarily switch our bullish outlook in favor of a sideways movement bias. It should be noted though that the RSI indicator for the 4-hour chart remains just below the reading of 70, reminding us of the presence of the bulls and providing them with a slight advantage. Should EUR/USD actually find fresh buying orders along its path, we may see it breaking the 1.1905 resistance line and aim for the 1.1990 level. If the 1990 is broken, then the path opens for the 1.21 resistance level. Should a selling interest be displayed by the markets, we may see the pair breaking the 1.1830 support line and aim for the 1.1760 level, and even lower we note the 1.1695 support level. Moving now to GBPUSDs for our chart. The pound's fundamentals seem to be on the positives, given that the UK eases its lockdown measures while at the same time an intense vaccination program seems to be ongoing in the UK. GBPUSD dropped yesterday, aiming for the 1.37 support line, yet corrected a bit higher during today's Asian session. Given that the pair's main body of the price action remains between the 1.3845 and the 1.37 levels, despite the small bullish outbreak on the 5th to 6th of April, we tend to maintain a bias for a sideways movement between the pre-mentioned levels. Please note that the RSI indicator below our 4-hour chart is recovering higher after bouncing on the 30 level. Should the pair come under the spell of the bulls, we may see it breaking the 1.3845 resistance line, aiming for the 1.3990 resistance level, while even higher we note the 1.4145 resistance level. Should the bears take over, we may see cable breaking the 1.37 support line and aim for the 1.3565 level, and our lowest level noted in the chart is the 1.3550 support line. Moving now to AUDUSDs for our chart. AUDUSD dropped yesterday from the highs of the 0.7665 resistance line to the lows of the 0.76 support line without being able to break it. As the pair's price action broke the upward trend line, characterizing its movement since the 1st of April, we switch our bullish outlook in favor of a sideways bias initially. Please note that the RSI indicator below our 4-hour chart is at the reading of 50, implying a rather indecisive market for now. Should the bulls gain the initiative of the pair's direction, we may see AUDUSD breaking the 0.7665 resistance line and aim for the 0.7725 level. Should our 2 be broken, we may see the pair start aiming for the 0.7785 resistance barrier. Should the bears take over, we may see AUDUSD breaking the 0.76 support line and aim for the 0.7545 level, which prevented the pair from dropping further on the 1st of April, while even lower we note the 0.7485 support level. Moving now to USDCHFs for our chart. The Swissy fundamentally seems to be affected by safe haven flows, given its dual nature as a national currency and a safe haven instrument at the same time. Against the USD, the Swiss currency seems to be strengthening as USDCHF is dropping since the 5th of April, and has broken the 0.9375 and the 0.93 support lines, both now turned to resistance levels. We tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line incepted since the 5th of the month. It should be noted though that the RSI indicator below our 4-hour chart is running along the reading of 30, confirming the dominance of the bears, yet at the same time may imply that the pair is oversold and the correction high as possible. At the same time, the pair's price action pushed the lower Bollinger Band even further before distancing itself from it during yesterday's American session. Should the bears maintain their control over the pair's direction, we may see it aiming for the 0.9215 support line, which held its ground against the pair's downward movement on the 18th of March. Should S1 be broken, we may see the pair aiming for the 0.9130 support level, while even lower we note the 0.9035 S3, which was tested for the last time on the 26th of February. Should the bulls take over, we may see the pair breaking the 0.93 resistance line and take aim for the 0.9375 resistance level. Should R2 be broken, we may see the pair taking aim at the 0.9465 resistance hurdle, which capped the pair's ascent on the 1st of April. We hope that you found this report useful, and if so, please don't forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.